Hello everyone. Welcome to the PivotBoss monthly market outlook for January 2022. Our very first monthly market outlook for the new year, for Q1 of 2022. Welcome. If you're new to PivotBoss, my name is Frank Ochoa, also known as PivotBoss. I wrote a book a little over a decade ago called Secrets of a Pivot Boss, still a hot commodity among traders all over the world that continue to discover the book every single day. If you've yet to discover the book for yourself, give it a shot there. Go to pivotboss.com and check out Secrets of a Pivot Boss. You will not regret that decision. Tremendous concepts there that basically withstand the test of time. Great foundational tools and concepts and ideas that help you identify trends from short-term to long-term markets and allow you to really identify great areas of opportunity. And that's a lot of what we're going to be doing here today. We're going to be using a lot of those concepts here today to discuss what's happening in the market right now, discuss key levels that we should be looking at. We're going to cover futures markets, again, the broader indexes like the S&P 500, the NASDAQ, the Dow. We're going to look at the Russell, crude oil, things of that nature, gold. But we're also going to do a deep dive into cryptocurrencies as well. This will be the first time that I've done a super deep dive into a number of cryptocurrencies. We've talked crypto for a number of years. We've mainly stuck to the big ones like Bitcoin, Ethereum, and the like. But this time we're going to be looking at north of 10 different coins in cryptocurrencies, from Bitcoin, Ethereum to Poly and Sol and Avax, DOT and others. So we're going to look at a tremendous amount here. We're going to look at areas of interest for entries from both a short-term and long-term perspective that could get you significant returns if some of these coins turn out like some of these other rotations we've seen in other coins. So a lot to get to here from that perspective. We also have stocks as well. If you have anything you want me to get to, please be sure to type it in the chat. Whether you're typing it in the chat in Zoom or inside the trading room at EchoFin, either one is fine. I'm monitoring each space right there. One last thing, this is a recorded session here. It is being recorded, so I will post it immediately this evening. So again, it'll be available to you right away. So without further ado, let's go ahead and get started with the monthly market outlook for January 2022. Number one, we're going to look at just kind of a top-down phase real quickly. Here's the ES, and a quick little story because this is the first month of the year. This is last year. That blue dotted line represents that 2020 close. This blue dotted line represents the 2021 close, and it's a straight line all the way up. A tremendous lower trend line that developed below those lows. It was very useful the rest of the year. Obviously, the upper end of the range very clear trending channel. Super bullish. And if you look at it from the March 2020 lows, I mean, it's come a long way, right? So when you look at this chart, you think, okay, the entire stock market did that, right? And you would be wrong, obviously. A tremendous amount of stocks look completely the opposite, where they actually started the year up here and they closed the year somewhere over here. And some stocks have held the market up, and the indexes have continued to kind of hold these gains, but a tremendous amount have already fallen 50, 60, 70, 80+% off their highs. And it's been a big revaluation of those stocks. You know, if you're looking at, again, not to pick on stocks, but just as a concept, a Roku, you know, going from 60 to 480 and now back to 200, 196. The first close below 200, by the way, in over a year. And then that's not even as bad as other ones like, for example, a Zillow, which dropped from 210 all the way to 50 and may make another leg lower soon. Again, another one that got overinflated. You have things, let's go back this way over here. Okay, there we go. In the same space as a Zillow, you got things like Open Door, which have dropped tremendously from their highs, over-rotated to the downside. Pick any stock. Pinterest down $90 down to 33. That's basically 66% off the highs exactly right now. Peloton is pedaling his way to new lows. This thing dropping below that key $40 level. And you notice some of these stocks are ones that we talked about in December as opportunities that if we saw rejection in these areas, we could get a pretty decent reactionary bounce. But we didn't. We did not see any kind of reactionary bounce off these lows. Instead, we just kind of saw price continue to churn through those areas, and thus there's been no entry on many of these. Instead, you got to let certain ones die. So this is what we've seen, and yet the S&P 500, again, as we just noted, is a 45-degree angle to the upside this year, right? This past year. So something's got to give there, and it's made this very difficult because now, despite Roku being a good company, where do you now revalue that stock on the way down? It's kind of difficult. You got to kind of let things play out. So tech being hit hard, obviously. Things like the YM holding up, big blue chips holding up a little bit, but there still may be some sort of revaluation overall. If you look at the ES just from a short-term perspective today, tremendous selling pressure. It's been odd that we've kind of started the year with lack of volatility, but it became clear today. The market was awaiting the FOMC minutes. That one right there is something that, right away, as soon as the FOMC minutes were released, we saw selling pressure straight down. And, going from 47.70 at 1 o'clock, and by the end of the day, below 4,700, tremendous. It broke below the 47.50 level. That's tremendous right there. So, when you look at this chart, this is something we warned about earlier this week, in the first pre-market video of the new year. Actually, I guess I should go back a little bit farther. Here's the range we were in, right? We have this lower edge, this lower edge, this lower edge. You have the top end up here. Then you built a box up here. And then we saw price push through the previous year's high barely and push back down. Becomes a squat day, in addition to a doji day, and now tremendous selling pressure, and the stops came out. So, from a very short-term perspective, heading into tomorrow's market, there could be a fade after trend day early in the day where price bounces a bit early in the day. If we do see morning strength, it will likely be met with weakness as sellers come in to defend and look to push this thing downward. If we close lower tomorrow, it could be tremendous, and we could be making our way all the way back down toward the bottom end of this range between 4,500 and 4,525. Perhaps not tomorrow, but over the course of a week. Additionally, if we take a look here at this 6-day range, we can use our PivotBoss Advanced ADR indicator here. We can use the 6-day range and quantify that range. You see the compression here. Today's day one of the break. We mentioned yesterday that if this is the high, 48.05, and we start to drop downward, how far will we go? And we estimated yesterday that between 180 and 220 points could be seen over the next 1 to 6 days if we get a breakout. There's the breakout, there's the high. If we go between 180 to 200, just call it 200 points here from the 48.05, that takes you at least to 46.05. 46.05 over the next 1 to 5 days. That is in rhythm with the same amount of distance we've basically seen before. So on each of these rotations, here and here, you see this one was 200 points, and you see this one was over 200 points, 250. So we have history behind us. Now, whether we get a new low, probably not. This market's so resilient, but maybe we do. We'll see. But at the very beginning of the year right now, we're starting to see an initial breakdown below that 47.50. If we pull back as high as 47.50, and this previous year's close could be used to sell it for a push into that previous month's midpoint. If that level gives way, that's where you open up further weakness up ahead. So this could be the beginning of more downside from a near-term perspective. Now, the overall trend remains up. So if we do rotate down, do we then just turn right back around and rally? You know, it's hard to bet against that, as that has been the way this market has operated for quite a while. You take this high of the key range here, and you know, we've reached the 100% target. If we come back to the top of that key range, perhaps it still maintains its hold. If it fails there, that's when you open up this level and you open up the lower level here. But the way that we closed last quarter, you know, we finished, this is the beginning of Q1. At the beginning of Q4, we said if we can just take out the previous quarter's low here, or the previous month's low, we could rally it to new highs and grab the 48.05. Man, that was almost like clockwork, but it got it yesterday, not at the end of the year. Great move. So we know that that key range is in play, but are we about to test it right now? It could be a magnet. So short-term wave could be down. After that wave, do we start to correct and rally? And you know, again, this zone right here is going to be very important, because if you start to break back below 4,500, now you may need a broader pullback of some nature. Again, you know, we'll see if that happens. And it does, you know, if that broader move happens, you know, the day it decides to go, I mean, one day is going to look like that. 2 days will look like this. You'll be 3 days and you're here if it really wanted to get going. So it doesn't have to take long. Look at this one huge day there. I mean, it's just a boom when it pulls back. But we still remain within the trend until proven otherwise, from an index perspective. But from a stock-to-stock perspective, not as easy. We'll get into some more stocks later on. If we take a look at the NQ, as we know, tech's been being sold a bit more than financials and things of that nature, S&P 500s type stocks. Major range day today. Today ended with a 206% of ADR day. Today's range was 206% of average 10-day range. And we mentioned yesterday that today could be one of those days if it got going here to the downside, because when you get a break, you tend to not only go that 125 distance but beyond it. And this one has been known to have those big days down here routinely within this range. So a good move here to the downside, but we're kind of in midair at the moment. The edge is that black line. That's the previous month's low. This is the previous month's midpoint. So to break that level is tremendous. Now any bounce back tomorrow morning could be seen as a selling opportunity for a push into this low. So everything is still working its way down at the moment. Now perhaps we get below this low and see rejection, and then that'll bring us back up within the range. It's a trading range market. That could certainly happen. And we continue to trend up overall. But again, in terms of a bigger, big bad wolf type breakdown, 15.5-ish is the market structure level. The upper end is about 16.7. And then down here you have about 14.5. So you have this zone here, which was traded before. You have the zone above it. The question right now is, are we about to come down here, reject, and go up to new market structure above? Just like it did here. It dropped, hit the bottom of this market structure, drove to the top, and then made new market structure above. Just like over here, the same thing. You know, it drops down here, boom, drives through to make new market structure above. Are we about to get that move down here and see that turn around and go? Because in the case of a major breakdown where we see more weakness ahead, say this bubble bursts even more, and you start to actually see it reflected more in the indexes, then that's, you know, you're breaking this level to get to that level. and then at this level you're bringing it back up and hopefully going higher. So, you know, market structure here is pretty plain for the NQ. You got this stuff here, this one here, and this one here, and we're pretty mature right now in this market structure. The next move is coming. It could look similar to this. If we just drive down, find rejection, boom, that could be the buy. So say 15K to 15.2. Can this thing drop down to 15K to 15.2? If so, do we see some sort of significant rejection? Because a 15K could ultimately result in a 17K type of rally. You know, so if we're looking out a little bit into, okay, how far can we go? To the downside, wipe it out, 15K here, bounce it, turn it around, and you're rallying something like this. 17K would be a new high, 17.5 would be here. That's in line with the 100% target of this key range. 15K to 17. Can we do that this quarter? Because if we break down below here and we can't get back above, it's an easy rotation back down, and then we try again at the next lowest one. So, you know, in terms of market structure, that's what we're looking at right now. I've mentioned for a year now, it's been, or over a year, until proven otherwise. We're in this trend. And right now it's about to, until proven otherwise, it could do this again unless it says, you know what, this is not the time. So, still bullish from an index perspective. And this washout phase could be very good to reset some prices and get things going the right way. Okay, let's go over here to RTY for a moment. This one's unique in that it's a giant distribution type of looking phase here. We just had a higher high rejection. It went sideways all of last year, and then curiously developed this little box above those highs. You got your FOMC key level on November 3rd, and as soon as it failed to hold the 2366, it dropped heavy. This had a 2-week head start on the downside before the ES and the NQ even noticed. Are we about to see a violation that takes us through this LVN channel below? This HVN and distribution very well developed. The one down here very well developed. But this stuff right here, nothing. All of that, nothing. And that's what's happening right now in a lot of those overvalued stocks that flew to crazy heights. They have now come through this channel and worked its way down. Will we see that play out again? You know, again, when I see something like that, it's just at some point, inevitably, you see it work its way through that zone. As of right now, this is a pretty heavy day down, and we didn't get a rejection. We mentioned yesterday in the trading room that if we got that heavy day down, if we could just find a higher low rejection, it could be tremendous for a rally to new highs. And that could happen tomorrow. We could be surprised, and tomorrow we could open up with a rejection of these lows and then close back above this midpoint, and it would look pretty good for a bounce higher. You know, any one of these big days down and it goes boom and it closed below that mid, ultimately goes higher, right? That's the type of thing we're looking for here in that bullish scenario. Perhaps price can drive down a little bit more, and then by the end of the day closes like this with a tail. And now you have kind of a 3-point reversal developing, and from that low, you know you at least got a shot to retest that high and maybe break higher. So I'm not saying these have to go down, but it's good that we're seeing some sort of discount to refresh these prices and get us at a spot where our probabilities are back in play. Because right here, the odds are not really with us at the moment. The odds are here, and they're not here. And that's right where we are still. So if we get down here, it could be a phenomenal opportunity to try back here. Again, if we get up here, it's an oversold opportunity to bring it down until we're done with this range. I think there's a good shot with the way that this thing is expanding right now that if we do drive to these lows, we may see an ultimate move that does us something like this, and ultimately we're at 2,500 by the end of the year, or at some point this year, off of these major lows. But we got to flush enough to get that discount and see it happen. So, you know, with this one, it's made a move today, a tremendous rejection of value. The closing VWAP from last year, maybe we get our move to an edge. So again, some weakness here. But tomorrow, again, there could be a little bit of a fade after trend day. It could start early up, and if it does, I'd be weary because sellers will then look to defend and drive this thing down. So will be an interesting start to the day tomorrow from that perspective. I did want to look at crude oil as well. Crude oil has been tremendous. And you know, when price of crude oil starts to get way at these levels like 75, 80 or beyond, trading the big contract can be harrowing, especially if the day's range is north of $2-3 or more. It can be pretty harrowing. So the micro contracts are fantastic from that perspective for those of you that want to engage those without breaking the bank if you're wrong in a contract like crude. Additionally, this one has been tremendous. It has been really, really good because it has given us not only great volatility and movement, but it's given us great rejections at edges, great rejections to play with. You know, something like this was a very strong rejection at an edge that we anticipated. 76 was our key level edge. We anticipated rejection there and saw it. Lower high, and you can see the moves, and that gave us an initial key range. This rejection in $4 day suggested we had a move back. You know, it did that and then some. This hard high up here was pretty strong. That led to, again, a market structure failure. Your $11, $12 day down gave us a strong reactive low back to the mid. This reactive low gave us a $10 move to our $10 target. So we had two $10 targets back to back off these strong lows, and they both were hit. So great movement. If you just wait a moment, crude oil is giving you what you want. But usually after you get that great move and we fulfill our target, you know, it's kind of hard now because now you have to kind of wait for the next one to line up. And this is where it's a little difficult for this one because it looks like it's kind of going both ways right now. Number one, from this low, a higher low, that's your high, and a higher high. So you've got this structure up. So maybe, again, any pullback here, say into 74, provides a bounce higher. At the moment, 1, 2, 3 days, and look at that. Those are squat bars right there. You're going to naturally get squats perhaps after a holiday finish, but, you know, that's natural. Again, can we get one pullback here? If we get one good pullback with a rejection, and it coincides with these moving averages, because look at the 8 has surpassed all the slow moving averages. One pullback into those moving averages with a higher low or some sort of rejection here goes boom to the next level. It's basically this play right here, where here's your 8 period, you got that burst up, can it get this pullback? Because boom, you have your move coming. So I think the next bit of selling pressure that we see out of crude oil could be a 1 or 2 day pullback, maybe whatever it is. It could provide a higher low, say, you know, anywhere between 73 and 74. Can it get a higher low in this zone, or right there, 72 to 74, and now you're launching to 80 plus. So that's the idea. The other thing that supports this is for those of you that have the book, higher value relationships are very important, especially monthly. Here's your value area, your pivot range, pivot range, pivot range. So it's a higher value, higher value. As soon as you fail to hold right the midpoint, you start to break. But as long as you're holding and you're going. Well, in this case, you had a lower value here, but you closed the month above the midpoint, and now this right here was actually an inside value with a bullish bias. So now any pullback into the pivot range ideally is bought for the next move higher. So crude oil could be headed higher, but first, got to wait out the pullback. What kind of pullback or shakeout do we get? Can we get something like this? Can we get a strong low on this next pullback? Because if so, it could get us launching higher to the next level above. The bear scenario here is 76 continues to be 76 to 78 continues to be the major zone of resistance here. You can see it resistance here. It kind of did the changeover here. Then it came and did the rechangeover here, and now we're back at it. And if there's a failure here, there's a tendency to come all the way back and stay within this range. So that's why this one's a little difficult here. Are we going to go back into this upper range and trade back within this? Or are we about to fail here and come back and stay within 65 to 75 type of zone? So some things to consider here for crude oil. But again, if we get a pullback with a great rejection on the low, it could offer a tremendous opportunity up ahead. All right, I wanted to jump into cryptocurrencies now. We're going to start here. I'm going to go with the two big ones for a moment. The two big ones being Bitcoin and Ethereum. Big ones from my perspective. Everyone may have a different opinion. We're going to look at, let me count these off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's 14 different ones to look at here. I'm not saying that's 14 different buy opportunities, but there's many different things to like about all these different cryptocurrencies. I'm not going to talk all the different fundamentals and all the different things. I'll bring up some highlights, and then I'll point you to some resources here where you can just get a quick idea of what's going on with each of these. But for the most part, the goal here is to begin our initial knowledge base of certain cryptos to look at, ones that have utility in the market space for some reason or another, that can then provide utility and grow market share over the course of years to come. Other coins may be more speculative in nature. I'm not really going to talk as much about those coins. We can go in here and talk about Doge and Shiba Inu and you know, whatever the case may be, and we can look at those. But I have others in mind that could provide even better potential here moving forward from a business standpoint and the like. So again, we're going to start with the big one here, and that's Bitcoin. We've been pretty good on levels on this one for a long time. I kicked myself one last time, but down here at 3250 was great. We talked about at the time 6500 was value at the time, and said, hey, that's a 50% discount. If you buy 3250, you can double it at 6500, and from there you can hold for the next 2 to 5 years, 10 years, see what happens. And here's what's happened, right? It's been tremendous. And even from that move, post-pandemic, it still got to about 4K before doubling, and then it eventually rallied, right? So tremendous growth. Up at these levels, though, it seems like a lot of bag holders, unfortunately. The frenzy. And you can look at various metrics. I come across so many different things. I'll start to share more of those so that I can point to some of these articles and see where I get some of the knowledge base from. But, for the most part, a lot of folks who hold Bitcoin right now are underwater. I think the average hold at the moment is somewhere like, say, 49K or something like this. And we're not there right now. That's the epitome of a bag holder, right? The price has now gone from $4,000 to 40-something, and now most of the people who are in above that level, and now you're underwater. That's the opposite way to go. So in terms of market structure, the levels that we had as buy levels last year was between 29 and 30K. I didn't know 29 and 30K was going to be that good, but we had our key range initially, and initially it did that, and it was like, whoa, okay, that happened way too fast and way too easy. It doubled. So we mentioned before, 28 to 30 would double, and it did it really quickly. And then it came back, and it did it again. 28 to 30 and doubled again. So that 28 to 30 level, very tremendous. Right here, I really thought it was about to break, and instead, positive headline risk comes out, and you see the big rally. So we're back. We're coming back to those levels, and maybe today was a transition day. These are the lowest prices we've traded since price rallied to new all-time highs back in October. Look at this right here, 43.5, and here's 43.5. Ooh. That 43.5 is also the November FOMC key level. I'm sorry, the September FOMC key level. It went bid, higher high, and perfectly returned back to it. That's the epitome of how you use an FOMC key level at times. So, tremendous breakdown. This might be a transition day. We might be headed much lower. Okay. With some of these, again, where do we think it could get to? Some people think it can go to 0. Some people think it goes to 100K. Some people think it goes to 0. Some people think it goes to 1 million. So you have everything in between. I could go on, and this could be a long discussion. But again, there's the Bitcoin halving that happens. The next one likely to take effect within probably in the next 2 years. The price during that time, whenever the halvings have occurred, have just increased almost exponentially. I mean, it's been incredible, and we saw that recently. So, the way that this is, and if you're not familiar with the halving, it's when they have, for miners, they're halving. I can't say the word now after I said it so many times. Cutting in half the rewards for mining, and then also there's a limited number of Bitcoin that will be out in circulation, so that makes it more of a store of value type of thing as well. So again, where are the long-term prospects? I mean, if it hit 65 here and hit 69 here, at some point you would think, okay, maybe it gets 75 easy. At some point. 100's right here. When it wants to go, it can go. So long term, I think it's very, very important to have some exposure because of what can happen. But where do you get in? And I think it's clear. This is the zone right here that makes a lot of sense, is being patient for this level right there. Another thing is MicroStrategy, the company that owns probably the most amount of Bitcoin. I think they own $6 billion worth of Bitcoin. That obviously fluctuates, but at 29K, that's their average entry. And at the time, they owned 122K Bitcoin. That's tremendous, right? I think they added some more here recently, like another, say, 7K or something like that. They're probably up north of 130 now or something like this. But the only way to improve that cost basis is to allow it to drop below, and then you can pick it up below, improve that cost basis, and hope it goes up. Again, we saw how tremendous that 30 to 29K level is. That was the prior year's close, and that was support the entire year. They were not going to let Bitcoin go negative. Having said that, can we get the meltdown here? The answer is yes, absolutely you can. And it can do it in one day. Whenever, these coins are very top heavy in terms of whales. It doesn't take much to really influence price percentage wise if they get to selling. That's one of the things that's actually not very good about Bitcoin right now, is that the distribution of wealth very lopsided. The top wallets own most all the coins, and when that's the case, if there's a couple of whales that sell, it can really drop this thing. Now, case in point is, let me draw this line, today's closing price, back this way. And that's the top of that day, and that's the bottom of that day. This is one whole day. And look where it got to. It only took one day. From today's closing price, we could be there tomorrow if it wanted to. These things can do it. So if you want a long-term entry, again, this is a great spot. When you look down here, perhaps that's ill-filled, and you may need to go get that at some point. I don't know, but if that point comes to it, it's an add back for a better cost basis and a long-term view on this thing. So in terms of market structure, you have the upper edge here. You're kind of violating that lower edge of 50, 47 zone, 45. And man, if you start dropping below 40 here, it opens up the next level down pretty quickly. So, thinking about it from this perspective, if you get 30, you double to 60, and then perhaps you have a chance for 90, and that would be a triple. From last year's high, that is exactly a 50% extension beyond the prior year's range, is exactly 90 basically. Man, can it go from 30 to 90? That would be huge. Not sure it would be like in 1 year, but this is the type of thing perhaps that could happen over the course of time. So those are some thoughts on this one here. Tremendous selling pressure right now, and we may need a little bit more of a wipeout. Not saying we get to 30, because there's a $40,000 level right here that's been pretty firm, but still it has a good shot here based on how we've seen some selling. I do want to touch here on Ethereum. Bitcoin's a good one. There are those that would argue Ethereum is better from a long-term perspective as well, overtaking or arguing that they will overtake in terms of market cap sometime within the next 2 years. Many different projects are being built on Ethereum's blockchain, if you will. NFTs are being built on it and other things, gaming, metaverse type of things, smart contracts, and all kinds of stuff can be done, and they're improving it constantly. So where does that take you down the road? Now, from just a basic perspective of key range analysis, let's talk key range analysis. You have this strong high, this low right here, and that high with this midpoint gives you a certain key range. And when you project that key range to the upside and say, okay, what's the 100% target? It takes you to 6,700. And then you just add a few hundred points, and now you got 7K right there. That's your nice round number level. Okay. So 6,700 is the ultimate target, perhaps, from this impulsive move. A rally up, a pullback, key range. And by the way, all of last year's movement happened off that key range, at least the back half of the year. And if you go to the 100% target of that key range, it is 6,700. If you go a little higher, that's 7K. As of right this moment, we're at 3,500. So from right now to 7K is a double. If you just want to say, okay, we'll do this right now, that's a double to a respectable target. Based on key range wave analysis, all that stuff, boom, boom, boom. Can we get a better entry, though? Can we get a better entry? Perhaps. Again, there's the ability to add back to these. And again, as strong as some of these have been, including this one, we've never come back to get a new low. We've never come back to get a new low. We had this low initially, around 1,700. Look at the low, look at the low, look at the low. Look at it back here. That's 1,700. That was the gimme. And it never came back below it again. You have this level right here, which is 2,800. That was the top end of the gimme level. You had 17 down here, 2,800 here. You cross over and make it support. Perhaps the best we can get right now is 2,800. If it goes to 2,800, You're coming into view of finishing VWAP from last year, and 2,800 can take you, say, to 5,600, and now that's a double. And now you're not needing to strive as high for 7 grand. You're in better. So 2,800 is the level we've talked about in the trading room as a great level where if you can be patient, that's a great level. If you want to be extra patient, 1,700 or 1,750. If you want to dip the toe at, say, 28, you could add back at 17, cost average in, and go. Again, we don't know how much pullback we're going to get on some of these, and that's the point of some of these cryptocurrencies. If you're going to be in this, you have to have a stomach for it, or you have to leverage yourself in a way that allows you to be able to stomach these moves. You don't want to put a life savings in there, say right here, and you're euphoric, and then all of a sudden it comes crashing on you, and now you're walking up to the 20th floor. So, you got to do this in a responsible spot. I believe 3,500 is a good enough spot because 35 to 7K, that ultimate target, is right there. 28 is a better market structure edge that if we can just be a little bit more patient, 2,800's here. That's also the midpoint of last year's range. And if you come down into that zone, you're likely to come back at some point again to that upper edge. So Ethereum, you got 3 levels here. 3,500 is not a bad one. 2,800 even better. And pie in the sky, 1,700 to 1,750. That's pie in the sky. That's wishful thinking if we can get it back here for a move. Again, anything can happen. But sometimes when you're left hoping and waiting for that move to come, you've kind of missed out on better, earlier entries that have now taken off. So I got to make some decisions on this one on when that entry is going to be. I mean, as right now, this is the first time I've seen it literally live below 3,500 since October. So this is the first time here looking at it at this price, and you're already seeing a little bit of a reaction. We saw it with our own eyes. It may never get that low. So some thoughts on Ethereum. If you look at this thing from a weekly chart perspective, tremendous growth over the last year. Can you expect the same amount of growth moving forward? Probably not. But you could, it could still become hot, and it could still be in its infantile stages. You look at this previous year's high, previous year's close, previous year's midpoint. If price drops, like we say, into 2,800, 2,800 could become 5,800. That's a double, and that takes you right to the R25. And then to get to the 7K level that we talked about before, that would be your R or your R50%. All these are PivotBoss pivots, and it's right in line. So, man, can we get a little bit of a pullback? Can we get that 28? That's a level that I've been trying to hold out for, is 2,800. And then if it were to see a broader crash, for some reason, adding back and allowing this coin to get back up there. So that's my plan of approach here at the moment for Ethereum. But I wanted to give you just some market structure guidance, the key range I'm using, and the ultimate upside target I'm using over the course of the next year. Over the course of the next year, we could be at 7K. And I don't think that's too far out there saying it, given the fact that we went from, say, 500 to 5,000 in 1 year. That's a 10 times move. We're just looking at the next double to 150%, right? That is Ethereum. I also want to talk other coins as well. We'll jump into some of these coins using this app over here, or website here. The first one we're going to look at is this one. Oh, good question there as well. So we'll come right back to that one. Do I consider ETHE a good proxy for Ethereum futures? I do. I do believe it's a very good proxy. So far, it's been tremendous. The first time we really kind of made that initial call was based off the rounded bottom here, and it tripled right away, 70 to 210. And it followed the price of Ethereum really well. The ebbs and flows have been similar. If you look at kind of that key range we're talking about, it's been similar. Um, so it has been similar. I'm not saying the price is right on, but like these lows is $17 and the other one was 1700. Very similar. Price rallied to what, 48 something. This one got to 47 or whatever that is. So very, very good proxy, very similar. Again, here's the midpoint of the year. We come down here, the lows. The lows on the one we're looking at again a moment ago is 2800. These lows are 2660. This one here is 2690. This one here is 2660. So that 26 to 27 zone would be about where, okay, 27 to 54. And then you got your 50 and 25% extensions here. So again, are we basing this move off of this? I think that they follow each other really well. It's a good enough proxy, and we've watched this one for a while and it's been okay. Unlike, for example, like the Grayscale Bitcoin one, that one's never really followed good enough. This one did much better, in my opinion. The one thing about this one that bums me out, and maybe I should check real quick, it has no options. That's the thing that's like, really? You don't have options on this thing yet? Good question there. Okay, let's come this way and let's take a look at a couple of these other coins here. Some of them, and what I like about this here again is that some of these stocks, especially over the last year, you see. Yes. Sorry. There's a couple questions coming in on the other side. The 2800, would it be like one share? Yes, it would be one coin. So 2800 would be one Ethereum coin or token or whatever you want to call it. If you want two of them, it'd be 5600 for two or whatever. So yeah, it's like one bit. But you don't have to buy one. You can buy a piece of one. You can buy $100 worth of a $2,800 coin and just own a piece of one coin. Hopefully that makes sense. For example, you don't need $43,000 to buy one Bitcoin. You can buy one Bitcoin with $20, and it doesn't. You won't buy the whole Bitcoin. You buy a piece of it. So that's how that would work. Jay. Okay, so now we're gonna get into some of these other coins. This is a cool app. Again, one of the traders in our trading room brought this app to our attention, or this website, Mazario. I've used it to look at some of these coins and really get some of the longer term data. It's a free app. You can also log in and do other things as well. I haven't even scratched the surface on all the cool stuff you can do with this. I have no affiliation other than it's just using it day to day here over the last few months. Poly, if you want to learn more about these coins, again, I just clicked the search here, found it, and you can see all these various things here. Profile is one thing you can click on, and it tells you here a bit about it and a bit about the history. Polymer is a decentralized platform that makes it easy to create and manage security tokens. So, simplifying the complex technical challenges of creating security tokens. So this one is mostly based on security tokens, things of that nature. And if you look at the chart and you go all, you can see this is what it looks like at the moment. Okay, you have the initial bump, you got the pushback, You got the long form accumulation rounded bottom. You got the secondary bump and pullback. This might be called a cup and handle. And then you get the next big rally up to a new high and then crush again. When you look at this pattern as a whole, here's Ethereum. It starts to look like this, right? Where you got your initial bump, you pull back, Ethereum round bottom, and then it explodes and continues to go up. So once you get that explosive move on the right side, it's only a matter of time. In some cases, again, if the accumulation's right, everything's going the right way, this thing just starts to mark up. So when you look at Poly, long story short, it has that look and feel to it where if something's about to go parabolic, this might be it. And where is it by the end of the year? Who knows? Keep in mind, some of the tokens or coins we're going to look at are maybe trading, say, 130 for a coin for, say, Avax or something like that. We'll look at that in a moment. But was, say, $3 earlier last year, and it goes tremendously with these gains. I'm not saying all of these are going to return X amount here, but some of these, again, have different utility that is useful for businesses that will allow it to be adopted in different things. I think on this rounded bottom with this initial shake here, you're looking at the potential to bounce again. And if we look at this, where are we going to go, or how far can we go? Where's the entry? I would look at this low right there. And I look at that high right there. And that's almost the answers to the quiz right there. You know, as soon as it got back above that level, it exploded to the top. You know, it comes down to this zone. It has another shot to go back to the top. And in the best case scenario, maybe it starts to rotate insanely higher. Again, at a cheaper price like this, you can add a few more, and you know, even if it's just $1,000 worth or $500 or $100 worth. That's what some of these coins you may only put a little bit because it might take longer, or whatever the case might be, or whatever your situation is. It doesn't have to be a tremendous amount, and I would not put, say, a tremendous amount of money. I'm not sticking 30 grand into this one. But I would do that for some of the other coins, right? Ethereum, Bitcoin, obviously those can withstand much more. This one, it depends on where you're at. But from this low, let's just talk price real quickly here. From this low, if that's the low and you're looking for this thing to come down and secure and maintain that market structure and lift off of it, then that low right there is bringing you to 35 cents. 35 cents is that level. So you look right here, the low is 32.80. So between, you know, again, 32 and 35 cents. Right now we're trading 48 cents. So sub 40. If this thing pulls back to, say, 35 cents, and what I'll be doing here is just setting a limit order in my Coinbase Pro to buy, say, 35 cents by X amount dollars worth. And we will see what happens on that, right? The idea is, if we are right and this massive phase begins, we may begin to see this thing rally. If it's just an amount that you want to roll the dice on some of these, and you say you enter at 35 cents and you put $1,000 in, if it goes to 70 cents, you've doubled. You can take out your initial investment, and now you're playing with house money for the end of time. And you can put that $500 somewhere else. Or if $500 is not, a big deal to you, and you like that lottery ticket, you can buy $500 worth of 35 cents here and allow this thing to try to go get $3. And you've made 10 times your money now. Something like that. I mean, it was already at 130 something. If we have some significant growth, well, what if it does go to $3 down the road? I mean, that could be a 35 to 30 play, nearly 10x on, a a small amount. So it depends on how you want to approach these, but the goal for me here is identifying coins almost like growth stocks, in that they have potential here to continue to grow and build into something, and it's not purely coins that are being influenced by tweets, right? Or you know, hey, Elon Musk says, hey, we're gonna do this on Doge, and Doge pops up. So every time he tweets is when price has to go up. You know, we're looking at this from a little bit of a different perspective. So this one, again, utility in the marketplace, sub 40, 35 cents might be a great spot to dip the toe in poly. Another one here is SOL, Solana. Real quickly, you come over here to the profile, and you'll see right here, Solana's public base layer blockchain protocol that optimizes for scalability, and that's a big word, scalability. Being able to scale, being able to, you know, provide a tremendous amount of transactions or whatever the case is. So this is one that's going to provide utility in the marketplace from that perspective. If we come back to the chart now and look at all, and then I'm coming down here and clicking on the candlestick chart there, you can see this is one of those ones that went bananas on price. Look at it right here. It was $10, $5, $3, and ended up going to 2 whatever very quickly. In July, you could have caught this at 40 to 240. So, you know, again, it's already had quite a boom. Where's the next level to responsibly enter on this one? And, you know, when we're looking at market structure here, we're kind of grabbing these levels right there and saying, okay, push above, a hold, that's bottom of market structure. Up here, you had kind of your top. It tried to hold above, failed new high, back down. 120 is looking pretty decent. 120 back to 240 is a double, and you're not even going to a new high. Ideally, if this rotation is going to continue to rotate higher over time, you know, maybe you got 300, maybe you got more. Who knows? But 120 would be the earliest entry on this one. Right now we're trading 151. The last time it hit, you know, 120 was back in November here, and it quickly doubled to 240, like right away. I mean, it was very quick. I'm not saying that will happen again. You got to be responsible here. This is not, you know, we're not gambling here in a big way. We're looking at some of these coins that, if it hits a responsible level, and we get a favorable bounce, are we able to then take some off the table, lighten the position, take some profits, and allow the balance to work out down the road? And I think this is one of those that can do that. So from a 120 or sub 120 entry, so 120, I know that's a big range right here, but if you dip below these lows by some little bit here, it could be a tremendous opportunity to get in and rotate this thing higher. So that right there is Solana. Another one here is Avax. I've talked about this one a bit, Avalanche, in our room a little bit from the perspective of me liking what it could do moving forward. Open source platform, blah, 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 enterprise blockchain deployments, and one interoperable, scalable ecosystem, etc., etc. So again, excited about what the utility could be. At least investors are about this one. From a pure price perspective, I like it because, again, it's almost like Solana here in that it has given us great market structure after the initial move. You see these highs right there that come in at about 60. By the way, here's kind of that rounded bottom and explosive move up. Those right there are the highs. This is where it explodes up, and now here we are sitting at 95 cents. A couple days ago, or a little while back, we were at 120 or so. You got between 60 and 75 here. That if this thing drops, takes out a few lows into 60 to 75, it's a double back to the top of the range, and ideally you're then pushing higher to new market structure above. Again, that's the goal with all these coins. This is only the infantile stages of what could be more gains to come out of these. I don't want to get too bananas and go .com boom and everything's a buy. And that's why, again, leveraging yourself appropriately, having a plan of action. Okay, this is my entry zone. My initial entry zone is between 65 and 75. That's the levels I have marked here for Avax. Between 65 and 75, can there be an initial entry? And if so, then I can double it back to the top of the range. If it fails there, is there an add back strategy, or is there a strategy at all? The question, or the answer to the question, should be absolutely yes. You have a strategy there for either adding back or cutting it or doing whatever. And again, these are all up to you. For me, on some of these, I want to put money to work that, if it comes to 65 to 75 and doesn't work out, I want to add a bit back to dollar cost average in and allow it time. Allow it time. Again, we're talking about for the year. This is Q1. What are these going to do by the end of the year on some of these? And if we can get a responsible entry early, there could be a very nice opportunity to go ahead and cut the risk while allowing profits to run on the balance. So again, that's going to be the point for many of these. So 65 to 75, a good zone here to watch for this one. Again, I don't know if we get that low on some of these. We may not, but it's worth holding out a bit to see if we can get a bit of a discount on them. Another one here, ADA, Cardano. If you click on profile here, this one uses a version of proof of stake called Ouroboros to secure the network and manage the block production process. This token has been referred to, or coin, or however you want to call it, has been referred to as an Ethereum killer. I believe that one of the Ethereum engineers or programs or somebody left and created this coin to beat it. And so if this is an Ethereum killer and Ethereum is supposed to do well, then this is kind of betting on the other side of the coin here and seeing if this one wins out as well. So this one, again, could be one that has some long-term potential, especially if it's being billed as something that ideally competes or beats Ethereum. And we know right now, or at least we believe right now, that Ethereum could be a best of breed overall long term. So looking at this one, you can see we got a couple of the look and feels that we've seen in some of these other coins that have exploded. You have this initial high and low, then you have this rounded bottom, and then from nothing pennies it went to $3. I mean, that's a tremendous percentage gain. But now it's back to $1.23. So from the $3, it has been cut by 60+%. Now what? And in this case, these lows look really, really good. Let's draw that out again. You have this pivot high right there, and we're now below it. You have these pivot lows, which is right at about $1. If it goes sub $1, can it bounce back to $2? Does it go back to new highs? We know how markets can be, where it expands on the upper end of the range and it expands on the lower end of the range. Folks want to take these players out and drop it, and then boom, bring it up to new highs. So with this one, can we get in below $1? I don't, maybe just $1 is enough, because $1 to $2 is a double, to $3 is a triple, etc., 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 etc. And the last 3 times here, it got to a low of 101. Here, it got to a low of $1 even. Here, it got to a low of 102. Back over here, it was 93 cents. So it hasn't even hit $1, but can it get $1 or sub? And I think that could be an opportunity, again, to dip the toe and see if this thing can get going. And we're betting, again, accumulation phase, initial buildup. We're betting that maybe this happens on this type of thing down the road. So again, out of these 14 we talk about today, will any of them be kind of a home run hitter by the end of the year? We will see. But again, getting a responsible entry is the first part. We got to let these pull back a bit. Another one, Dot. Dot is Polkadot. You can click on the profile over here. You can go down here and oh, here's the founder of Ethereum. My bad. One of the founders of Ethereum here. So this one right here is for Polkadot. Has some cachet there. A huge. I mean, they really want you to know their history because they feel important. So this one right now has the potential to see some big gains as well. It's already seen some price action here. Again, all this back here is kind of, just whatever. So let's look at the most recent price action. Right here is where we can get used to some of this. This is a $10 bottom of your range here and here. Up here is a $50 level here and here. Yes, it went from 10 to 50 plus in a few months. And recently it's spent a great deal of time trading between 25 and 30. Can we get one more move down? Because a $10 to 50 or 60 seems like a great way to go. I think we have a great shot to hit it. And you see, I'm not being crazy over the moon here on these targets. If this was your high 50 and this was your high 55, the next one's likely going to be 60. And if you look down right now, we're already a double to get there, but there might be more of a discount first. If you can get to 20 to 60 is a great return. If you can get to 10, oh my goodness. 15, where does that low come in? For me, I'm not super eager or in love with any of these to chase any of them right now, right? I don't want to be left holding the bag up here or here or here or here. Let it pull back, find the discount, and then let it go back up again, right? So that's why, again, I'm okay letting it come down here. 10 bucks, pie in the sky. Maybe we don't get 10. Can we get 15? 10 to 15? If so, we got good multiples to get back to 60 bucks. And that could be a great way to go right there. So another one right there to watch out for. And we'll make the rotation over here to stocks here in one moment. I know this is taking a little bit more time. I wanted to talk about QTUM. QTUM. If you go to profile here, some of these smart contract related, some of the ones we're looking at are more altcoins now, smaller altcoins. Some are for metaverse plays and different things of that nature. Some have partnerships with big companies. For example, like Dell has a partnership with Iota, different things of that nature. So in order to make this a little faster here, we'll just start looking at some of these prices. QTUM, again, looking at the broader chart here, has some of the things that we're looking at in terms of the potential to see that meteoric rise after an accumulation phase. It got the initial bump higher, 8 to 30. Now it's come back and is trading 8 right now. The next wave up likely takes you past that prior pivot high in the best case scenario, right? So you're thinking 40. So right now 8 to 40 is already a big 5-bagger. Can it go beyond that? So for this one right here, again, some of the things that they have going on with this project here looks good for a longer term perspective. It may be early on in the coin's process right now, but when you look at what it's done here recently, again, you have to have a stomach for it or leverage yourself in a way that you're not hurting yourself every time you get a counter rotation. You know, you go from 5 to 15 and you feel great, and then all of a sudden it's back to 8. You know, you got to let these things work. The best way for me, again, is allow it to get to an edge. Can we get $5 on this entry? Can we? 6? Can we get $6? If we can get between $5 and $6, a return to 20 would be great. Take some profits and then allow the balance to maybe become some sort of incredible return. I mean, all you need is one good phase like this and you've made 10 times, and then you can just whatever. So 5 to 6 on QTUM. Another one here, XLM. XLM is stellar. This is another one that has a lot of potential behind it. Again, you can go back in the profile and read more about it and in other areas. What I like, again, is the initial rounded bottom, the initial rally, and now it's on this phase where it's on the shakeout. So the potential is there. Even if you get 20 cents here, 20 to recent highs is 80. I mean, come on, the turnaround there is significant. But the goal here for something like this is being patient about it, letting it pull back, getting it at this lower end, and allowing it to just be a part of the flow of this certain market here. $20 or 20 cents rather is a good entry. 25 cents. I mean, you know, we're already at the lower end. Right now it's trading 26.5. Can we get that pop? Again, rounded bottom, kind of the jiggle. Can we get this phase here where it explodes through 80 and becomes a $3 stock? Right? If it can become a not a $3 stock, a $3 coin. If it comes $3, it's a tenfold from where we are right now, right? So this is one with a big name behind it that that could be good. Another one here, Algo. I know we're going long as well, so thank you for your patience on these coins. When I started looking at some of these recently, I wanted to continue to add on some of them. We'll keep Algo for a different time. This is Algo land. This has decentralized digital currency transaction platforms. Another one. Perhaps some of the other entries might be better from that perspective at the moment. Nano is another one here. Peer-to-peer transactions. For this one, as its kind of unique selling proposition. Right now we're right at the zone here again where maybe it has a chance. I would say, again, this is a severely altcoin here. It's already gone from 3 to 30 something and got your 10 bag. At some point maybe it does it again, but this one is one to watch for some of its, you know, what it's doing down the road. Whether it participates faster than not on some of these other coins, we'll see. And another one here, again, let's go with this last one here, Iota. Again, partnership with Dell. You can see a lot of these are on the phase where some of these were before, where you look up now a year later and they're over here somewhere. This one may do similar or may not do anything at all. But it's at a decent price compared to what it was just a week ago, just 2 months ago. And even if it gets back to those levels only, you will have done a great job percentage-wise, as we're trading $1.16 now. And just to get to, say, $2.50 or $3 would turn around and be able to get you a double. But so some of these have already really good mature charts. Some of these, like this one, still has time to build out and develop. But I wanted to start getting some of these at the forefront of here, so that we can continue to watch and participate in what could be a continuing sizzling market in some of these. Now, some questions here regarding liquidity of these and things of that nature. You know, when you go over here to assets, let me see, let me search it over here. When you click on this, you get a huge grid over here, And you can see several little ones here. This is Bitcoin, Ethereum, BNB right here, Tether. Here's Solana, ADA. We talked DOT, Avalanche. We did not talk these two. You know, some of these other ones, you can come right over here. You can see the market cap. And obviously the first two are the big ones, 800 and 400. Then it drops quickly to 79, 78, and then quickly again to 40 something. And then, you know, by the time you're down here, you're at 10 billion. So a big difference just from the number 1 to number 20 coin. But you can flip all the way through to see where some of these are. Again, I'm not even looking at any of these other ones down here. But not to say that there's not always something that's going to be popping. But of the ones we talked about, they have utility business-wise moving forward that could provide further pop down the road. This is where you could see what market cap is like and what the amount of flow is happening, how much is pushing through, or how many coins have exchanged. And you can do additional. Okay, so here's the volume over 24, 6.5 billion, down to just this. So when we're looking at some of these smaller coins, again, perhaps the liquidity will be a little bit less than some of the other ones, or whatever the case is, but each one's a little different. So that's the thing, is learning some of these. That's why I'm not looking at, you know, anything way down here, the list. Not to say that some of these won't mature, but trying to go with best of breed as far as we can go. All right, thank you for being patient on that. That took a tremendous amount of time, but I did want to do that subject well. When we're talking about stocks here, again, there's been a rotation out of those significantly overvalued stocks. You know, the thought process here moving forward is value stocks. Stocks that have a good balance sheet, that continue to print money. You know, you're looking at stocks that just continue to do well quarter over quarter, not stocks that have no revenue or no profitability. I'm looking at you, Virgin Galactic, you know, things like that just don't have any revenue. So why would it be valued so much? It's a speculative stock that will move on speculative waves. Others are actually making money. Or so there's those are value stocks right now. There's those undervalued growth stocks, where you have growth stocks that have probably gotten beaten down alongside the rest of the market, but they are actually seeing, you know, active user subscriber counts or whatever increasing. They're having revenue increases quarter over quarter, you know, and they're moving the right way. And then there's going to be, you know, having some ability to add to positions or add to opportunities as we start to see them finish out. You know, some of the things like PayPal or Roku, or some of these stocks will begin to find lows, and you'll want to have some cash available in order to put that to work. So, you know, looking at value opportunities, looking at opportunities that are growth stocks but undervalued, and then being able to add to positions as necessary. So, you know, having said all that, there, you know, we talked about this stock a little bit earlier, and that's Roblox. This is one that's getting crushed at the moment. I think it has significant upside down the road, and we've mentioned that from the very beginning. Looking at this one, it looks like a transition day here today, below 90. The idea with this one is down the road. This is part of the metaverse. Moving forward, I guess I'm using metaverse in terms of a almost, you know, metaverse, I guess, is like the Facebook thing, but I'm using it in kind of a broad brush approach, a virtual space. Roblox is right there at it, and they're doing tremendous growth in membership and growth in revenue, 100% revenue growth quarter over quarter from a year ago. Tremendous. Right now getting crushed because of the growth was tremendous. Man, sub 80 is what I'm talking about those undervalued growth stocks. This could be a stock that grows down the road 1 to 3 years out, could be tremendous. But you want to find it undervalued right now. And where is undervalued? 80 to 50 is VPOC. Getting below that level would be undervalued. You have an open gap here at 77, which would be a major level of note. And if you were to hit below 80, a bounce back to new highs, you start to work into this zone down the road. That's a long-term double there. So, how far can we get to the downside? Do we flush it and go sub 70? I don't know. But again, this is going to be one to watch after it flushes for a shot at bringing it back up and then holding it longer term. This is definitely one to participate in that meta space down the road. EXPI we talked about last time. I know Phil's at, or it wasn't Phil, rather it was oh man, I kind of got behind it. Sam was asking a little bit about this one. We talked about this one before, EXPI. This is I would say this is like Roblox in that they are making money. They posted a $1 billion quarter for the first time in Q3. It's just doing really, really well overall as a business. It also was a product of the growth cycle there and that explosive overvaluation. It actually went from $8 to $180 and then split 2-for-1 right here. So, and again, just for purposes of disclosure here, my wife does have a significant position in this one, and fortunately we were able to build it in, basically build the position down here March, April before it exploded, continuing to add on dips. For me, aside from that position, you can see kind of a zone here that I have drawn out, and that's the 22.5 to 20 zone. 22.5 to 20 zone. And Sam, especially for this one thing that stands out here is that blue dotted line right there. That's closing value for this past year, and it's exactly $45 right there. If at some point we oversell and you see responsive buyers come in, at some point during this year, perhaps there's the ability to bounce back to value. A 22.5 to 45 again gets you a good return. 20 to 22.5 would take out these lows and return you to a spot between 40 and 45. That's just a high quality target. So is that pie in the sky for this one too? Is 45 too much? Again, when it was valued $5 and all of a sudden went to 90 or beyond 180, I mean that's obviously way too much. So that's why, again, being patient on this one, seeing how far it can go, and then looking to return it back to value. So right now I have a 22.5 to 20 zone that I'm watching. Got to see how it responds, and can it get there? And then if it does, how does it respond? Because if you're looking at something like a Peloton, we talked about the 37.5 to 40 zone last time, and as we came into that zone, and I have it drawn here, the same zone, you see no reaction to that area. It was no reaction at all. As a matter of fact, it just kept melting and decided not to do anything with that one at all because it's still getting crushed, and rightly so, right? Let it continue to Peloton itself all the way back to lows. But so when you come into these zones and we have these opportunities, we have these major zones here to watch, you got to be able to see significant reaction or rejection in those zones. If you do not, it could continue to just eat through that area. So right now, still watching this one die. I think at some point it still gets it still gets a good reactionary bounce, but perhaps 80 is not the level anymore. Maybe when it bounces, 52 is about as high as it goes. So 26 to 52 might be the level. So right now with this one, I'm hands off on this one and others that have faded and eaten through those support levels without showing any major rejection. It just didn't want to do it. Mark is asking a good question a little bit earlier. I'm just filtering through a lot of these. So thank you for being patient here. But Mark's asking here, could I add Bitcoin analysis to the daily morning videos? And I certainly can. That's a thought that we talked about in our trading room as well. I was thinking about dropping gold and adding Bitcoin. We could also add Ethereum as well. So yes, absolutely. That's something that I'll definitely be looking to do, and perhaps as early as tomorrow. Oh, Link. Yes, let me look at Link here, and I know we got other stocks here for a moment. We'll pop that one up. So I'll bust out Link here in 1 second. So another one here to watch out for from a perspective of a business that can just make money and maybe due for some movement, Planet Fitness. I've liked Planet Fitness over time. Its model is great. You know, we've liked it since it was cheap back here, and then it just increased tremendously. And every time we put a key range on it, it would hit the 100% target. Put another key range, it hit another 100% target, and all of a sudden it's a $99.6 stock, all the way from 20 bucks. Tremendous, right? But when you talk about those stocks that aren't making money, and they're dropping, from the top left of the chart last year to the bottom left, you see this one did not do that. It held. Not only did it hold, it was near highs and at highs near the end of the year. This is one that, again, you know how it is. You pay, what is it here, 10 bucks a month or something like this? And so 10 bucks a month is nothing. You pay, you go twice, and then you keep paying 10 bucks a month for the next 2 years. And that's their business model. And, it continues to print money. So for one, if this thing can get out of its range, can this thing get through 95s, you start to open up new market structure ahead, where maybe we're headed to 115, 120. And so any pullback early this year, maybe in an 85 zone, something like that, 85 to about a 115 could be a pretty solid move. So right now, not actionable, but when you're talking about some of those stocks that could continue to show strength or at least maintain gains, and continue to post a healthy balance sheet, this is one to keep an eye on. Let's take a look over here at Link. I should have mentioned Link a little bit earlier. Thank you for bringing this one up. This is another good one. This is Chainlink. Another one that has really good utility in the marketplace. People like it for certain reasons. And again, you can click on the profile to check out more. When you look at it from a market structure perspective, you have a couple of levels here down below. Your $40 level is important here, and that's your range now. This is your blow off top up there, and it's down tremendously. But your range is 40 to 20, or a little bit lower, 15 to 20, 15 to 40. That's a pretty healthy range, especially percentage-wise. When you look at this low right here, that's 13 cents or $13.39, and you look at this high over here, that is 38.30. So that's basically a triple from that low to that high. That's what we're looking for right now. Can this thing get to this zone of here? Link, if you can get, again, between 15 cents. Can you get in at 15 cents? Can it drop down to 15? 15 to 30 could be great. I keep saying 15 cents. 15 bucks to 30 to 45. Maybe down the road it explodes and you continue that trajectory and it's trading 100. Who knows by then? But this is one, again, that has good market structure at this lower edge. If you can get in somewhere around 15 in this lower zone, it might make a lot of sense. Again, you only have to go to 30 to take out your initial investment. So that's a good one right there to keep an eye on as well. Again, the entry is somewhere about 15 bucks. Can it get that low? The last rotation down here was 1573. and that was late November. Again, I don't know if we get that low, but perhaps we do. We got close, and maybe it's on its way up again, but then it drops back again. That's what these ranges are like. So good market structure right there for this one. Not bad at all. A couple of other ones here, and then I will leave you to it. You know, we talk about stocks that are going to, you know, you want to be in those value stocks that continue to do well, continue to make money. You're talking about Apple's, Nvidia's is one of those as well. You're talking about some of those other stocks that just will continue to do well in this environment, although that doesn't mean we can't counter-rotate. This one, obviously, from last year's open price of 120 whatever, it went to 3 something. I mean, that's just tremendous, tripled right out of the gate. This is your range for last year. It's too big of a range, so we might need to just compartmentalize and hang out for a while before it continues higher. If this thing were to pull back a little bit more, it would be worth perhaps getting in for a range move from 230 to 350. You know, we're thinking about something like that here, where if we break this zone right here, then you may have as deep as this range that could be in play, and from there you bounce it back and maybe, you know, start working your way up. So Nvidia, I still like. It is the, you know, chip stock of the metaverse and of the future and of everything we've been doing, which is why you've seen this thing grow. Look at this price. Look at this, $40 to 350, and it will continue at this pace based off of the future we're seeing. You know, it's needed in everything. So the one bad thing I would say is that it's gone far this year. It's gone far this year. To go 3 years like that is, you know, probably fairly rare. So this year might be more range bound, building some energy, and perhaps we can start to flow again out of here down the road. So some thoughts on Nvidia, but it's still a super strong stock, very good long term. You know, if he starts getting 230, 225, it might be a great entry long term. You look at MU, another chip stock here. Saw this one a little bit earlier on the wick reversal sell list right here. You can see a big rejection here. That rejection's happening at the previous year's high. Here's the previous year's close. That's the previous year's midpoint. And there's the low way down here. Big range. We're seeing it again. Maybe this has overdone it again, and we might be done with the upper end of this range. This is a large range, so you compartmentalize it, you know, kind of going in the middle. If you drop from here, you go to here. You drop from here, you go to here. You drop from here, you go to here. Are we about to drop and go back to here? $80. $80, that's closing value as well for last year on a CVWAP basis. This is also right around R3 on a closing basis for last year. R3 on the PivotBoss bands, you return to value. And if we do that, do we then do this across the lower edge, or does it just kind of stay up here for a while? So right now, the way this one looks, that's a strong top. And each time it's rejected prices above 95, it has returned back to 80 almost every single time. So one to consider here on a potential pullback basis. If we do get a pullback, again, it probably bounces right back up and stays in this range for a while. The other one here is AMD. AMD sold off pretty heavily the last couple of days. Failed new high yesterday. And if you're in the trading room, one of our traders in there, Manhattan, asked about this one Monday afternoon, and we mentioned based on the strength here, we may see a fade after trend day the next day. Look for a failed new high for a move back to the mid. If it can't hold the mid, bearish outside day. Boom, bearish outside day. And from that, we saw price go offered at the previous year's close this morning on a morning pullback, and then boom, right down to the yearly top of the pivot range. So selling pressure, tremendous amount of selling pressure early on. This is another one, again, a chip stock that is very strong, that will continue to participate because of, you know, Web3 and Metaverse and all these things, right? Big, strong 2 years. Do we get a big, strong year 3? Or does this huge range last year, this huge pivot range this year suggest some compression, some digestion, just like we see, for example, for maybe Nvidia? This chart almost looks identical to Nvidia right now anyway. I would say right now if it dropped a 120 level right here, it's hard to kind of pass up as an opportunity to return it up. I don't know if we get as low as a rising or that composite VWAP, but that could be a way. So I think at some point we're going to get our sell-off. We find a strong low and bounce, and now we have ourselves maybe a range up here that can be in play before it tries to continue onward. But these stocks, generally speaking, continue to remain strong. Even if it did do this, I don't know if we stay down here long before it just all of a sudden just goes. These are some good strong names. Apple. Apple, again, another one of those that if you want to own something that's valuable, that continues to make money, that continues to prove itself and not be in the Pelotons, this is another one of those that just continues to do well. You know, overall, if this thing were to pull back a bit, it could be a welcome pullback ahead of what could be another push higher. We're seeing a theme here on these pivots, and the pivots I have up right now are the yearly pivots. So previous year's high, previous year's close. When they're very close to each other after a big year, there's a tendency to reject those levels and fall back into the pivot range and then continue higher. We're seeing that pattern over and over. The middle of last year is exactly 149.17. A failure there can open up a return all the way to the year's low. I'm not expecting that. But what can be expected is this. What can be expected is perhaps a defense of this zone and then a continuation down the road. We've seen that ability multiple times in this stock. We're at a cycle high. I think we have a shot to pull back. 150 could be about as low as we go if we get going here. 150 could be a great pullback, and then we're going higher from there, and 150 to 200 could be the next move. Last one here, Intel, another chip stock, although it does not look like Nvidia, does not look like AMD. It looks like Intel. Intel, I don't know why, it's always had the ability to just be stuck around the $40 to $50 level. To me, it just seems like any time I've looked up over the last however many years, it's always just kind of doing this. And it's still doing that. The edge is way up here, the edge is way down here, and right now we're at 55, kind of at the center. This, of all the things we've looked at, this is my least favorite chart. Very volatile, very whipsawy. It looks like an EKG machine, just going up and down, back and forth. This test right here at VPOC and the pivot range midpoint there is going to be very interesting, because that sell could get things going downward, and we're now testing the quarterly low. Maybe we over rotate to the bottom of value and get into this LVN, and now we're talking business. Now between 42 and 44, you provide an opportunity to buy in as a responsive buyer and rotate this thing back to value and higher. So this one looks as though it wants to rotate back down. It has a strong high today at finishing value last year and at a major yearly pivot. It's right at resistance. like some of these others, it looks like it may swing back a little bit before proven otherwise. You know, and again, the 56 level opens up to the upside, although right now doesn't appear eager to do that anytime over the last quarter. So not much to like at the moment out of this one from this perspective. And cat. Yeah, Richie's asking about cat here. Cat and deer, two of these that came out hot to begin the year. I mentioned this one a little bit earlier. This is a good one, and it's gonna have to prove it here. But I like this one. It's had a year where it had to kind of digest, compress, and maybe there's a rotation into this stock now, as evidenced by yesterday's range, for a spot to, you know, go much higher. I like this one for a number of reasons. Number one, you have this rounded bottom accumulation pattern. That's a great pattern. Number two, it has taken value bid and taken the previous year's midpoint bid. So if you can stay above that 213, even if it comes back and stays above 213, that's the next target to test. 247, the high. That's the major pivot. This midpoint. Can it stay above there? It can open it up that. If it can't stay above there, theoretically it goes back to the bottom, or it can. So I like this one in the potential to go much higher. Now here's where it needs to prove it. You have this level here. You got that rounded bottom there, and you have that value. So if it pulls back, can it form some sort of rejection and go? Can it break through this level and go? Can the next pullback be a buying opportunity that gets this thing going? Or are we just going to dump off this level yet again and dump into these lows? So what I mentioned in the trade room this morning, or earlier today, this is at a significant pivot in the chart. And if it can find acceptance through 223, 225, much more upside. Otherwise, man, we may have a little bit of a pullback on our hands. HD here. Yeah, Manhattan, that's a good question. Should we expect a general pullback to the mid-pivot levels before we continue overall? I think on some of these, that is the general expectation. Here's Home Depot, and this is case in point. We've seen this a number of times now because last year was so extraordinary. But here's last year's low, and here's last year's high, 420, and here's last year's close. This is your pivot range for the entire year. It's just too tremendous to expect that we're about to break through and extend the range again. If you've read my book, you know that a wide pivot range is indicative of compression phase to come. And if you're going to compress, you're not likely going to rally and compress up here. You're usually going to drop and compress in the range. So yes, on some of these, it is good to generally expect some sort of pullback from these highs that brings it into this pivot range, and perhaps as deep as the mid for some of these. Maybe not for Home Depot, but you know, some of these may get back to the mid, and that's a tremendous opportunity. For Home Depot, this is just such a big range and such a big move that at the very least, we've already begun a range. We're already in a range, and it's between 380 and 420. And at the very least, you're going to see this right now. And that's kind of what this suggests. We still have the overall uptrend, but after this big move, it needed to go sideways for a number of months before it went again. And maybe we start that way again. So some of these, yes, they do need to pull back a bit more. Well, we went an hour and 45 minutes here. An hour and 45 minutes. I could keep on going. I know you all could keep on going. One of our longest ones yet. Again, it looks like we got a lot of great feedback from those of you that are interested in our crypto analysis here. We got in some futures early on, some stocks here late. And again, some of these cryptocurrencies that we looked at in these charts look look good for dipping the toe at lower edges of the range for what could be tremendous gains by the end of the year for some of these coins. We will see. So again, looking forward to engaging these markets with you all. Again, thank you very, very much for joining me for this first monthly market outlook for 2022. Again, you can find me at pivotboss.com. If you want to enjoy a good trading book, Secrets of a Pivot Boss is right on. And again, we're always in our Pivot Boss EchoFin trading room as well. So again, thank you all very much for joining me. We'll be back at it again soon. Take care, and I'll see you soon.